Hey everyone, it's time to begin our trade analysis for today. Alright, so we are looking at a 60-minute chart, which I think is a great tool to break down different trends and fluctuations in the markets. To begin with, I'd like to direct your attention to this Australian USD order block section, which as you can see I have specified using a rectangle. Now, as you can see from the chart, after this sideways action and the printing of a new structural low here, the pair enters into a relatively, I would say, measured uptrend from this top hunt area over here all the way through to its entrance into the order block's source domain. The pair then breaks up rather bullishly through the base of the order block to test its stop, which is obviously a strong resistance area, only to get rejected and fall back lower. Next, the pair makes a reversal and rapidly surges upwards, easily breaking through the order block's base and ceiling before reaching its highest intraday point yet. And here is where you start seeing the market's first directionally driven tendencies, which are clearly long in this case. Obviously, the question here is, well, based on what influences this conclusion was reached undercurrent? Well, because in addition to these sideways segments that took place in succession, which I believe, by the way, represent a pause within the pair's larger uptrend, particularly after this new high was printed, so when we analyze this whole consolidation and expansion process, it's clear that they are highly correlated with one another. In addition to these influences, we also have smart money inducing this nose-diving move over here, which is clearly manipulative in nature since it is designed to shake out weak retail hands. And the reason I'm saying this is because this price drop aligns with algo-driven stop hunt tactics usually seen near downtrend bottoms or uptrend tops in this case. Furthermore, price stopped deteriorating right at support, formerly resistance, which coincides with the order block stop. Now, as long as price remains within the order block's zone, our long bias on this overextended pullback with no prior relief remains intact. Obviously, this area now becomes our point of interest, so let's proceed to the next step and switch over to a 1-minute time frame. As you can see from this executable chart, as the demand increases, prices start to push through the upper levels of this trading range before breaking structure. We then have a quick reversal take place via this long bearish candlestick, balancing these inefficiencies here. By the way, this dump was another smart money move. Keep in mind, guys, that Wall Street's big boys can typically achieve distribution faster than accumulation when it comes to rapid liquidity grabs. And as I said, this was just another example of it. Okay, so this imbalance here, which is already shaded in blue, is a point where I would enter long. The reason why is simple. For one, the bottom of our trading range is well established at this point by this stop hunt footprint over here. Furthermore, all inefficiencies have already been addressed in this region, and we are also currently trading below the FIBS 50% retracement level. Obviously, this would be our profit targets, so we're talking about a 37 pip gainer with a 7 pip stop loss. And now, guys, one thing to keep in mind is that trading isn't something to take lightly. It's a commitment and requires careful planning. Particularly when it comes to trading our own accounts, we must be consciously aware of what we are doing. Not only is this the best way for us to learn and grow in an effective manner, but it also means that any decisions taken will ultimately lie with us and with us alone. Viewing these charts should serve, I think, as a stimulus for further thought-provoking analysis, which obviously leads to informed choices on trading opportunities going forward. Prior to initiating a trade, it is essential that you have a plan in place. As the saying goes, plan the trade and then execute the plan. This includes setting up parameters such as trigger levels, intentions of target areas, and stop-loss limits. My point is, guys, if you want a high chance of success with trading, having a solid plan is absolutely essential. Take the time up front to get your ducks in a row, and you will give yourself the best possible chance of achieving great things with your trades. Alright guys, that should do it for today. Thank you for tuning in, and if this video provided any value to your day, please like and subscribe to the channel. I would really appreciate it. Thanks again, and until next time.